Welcome. In this video, we will analyze if Onyxcoin can get a reaction from here. Don't forget to subscribe and like, and please watch to the end to understand. In the previous video, we discussed in detail that the descending trend has not yet been fully broken. The price, facing resistance from this trend line, has reacted downward again and has been fluctuating around its current levels for a while. However, this does not mean the descending trend will continue indefinitely. On the contrary, the area that the price has tested several times before may now have become a weakening resistance. Even if the price dips below this level, it may quickly recover and prepare to test the descending trend line once again. Although strong selling pressure was observed at previous contact points, each new attempt causes the resistance to weaken. If the price attempts to test this trend with greater momentum on the next try, the likelihood of a breakout will increase significantly. In such a scenario, the area above the descending trend line will empty, and new upward movements may begin. It's important to remember that not all pullbacks in the market are necessarily bad. These kinds of retracements can allow buyers to gather strength and set the stage for a stronger rally. Even if the price experiences another decline, the key point is how buyers react at these levels. If strong buying comes in, the decline will remain just a short-term correction, setting the stage for the next rally. As we've seen before, after the price tests a resistance level multiple times, it tends to break upward eventually. This is a common occurrence in technical analysis. The more often a resistance is tested, the higher the likelihood of it breaking. In the upcoming period, if buyers come in with greater volume to surpass this descending trend, upward movements will become more pronounced. Therefore, a slight pullback in the price should not be seen as a negative development. On the contrary, this pullback could create an opportunity and form a new buying zone for investors. Right now, all eyes are on the next attempt at the descending trend line. If the price breaks through the resistance level with greater volume on the next push, upward movements are highly likely to accelerate. You can wait for the breakout before entering a trade. If we carefully examine the current price level, we encounter a highly significant and strong bullish order block region. This area has repeatedly acted as a strong support in past price movements, and whenever the price approached it, buyers have stepped in, creating upward reactions. Particularly in the markets, such bullish order blocks are often key liquidity zones followed by large institutional investors and market makers. The fact that this area has been tested numerous times in the past clearly highlights the intensity and importance of buy orders here. Given that the price has previously reacted upward each time it touched this level, the likelihood of a similar scenario occurring now is quite high. If buyers continue to defend this level, the price could gain strong upward momentum from here, accelerating the uptrend. Considering that large investors and market makers often use such levels to collect liquidity, it is clear that this is a critical support zone. However, to fully understand the impact of bullish order blocks in the markets, a deeper analysis would be beneficial. Order blocks are areas where large players establish their positions and where large volume trades occur. Therefore, the market's response when the price approaches this level will be quite decisive. Right now, we are observing whether buyers will step in and react as the price moves towards this level. If the price reacts strongly from here, as it has in the past, the likelihood of continued upward movement will increase significantly. However, if the price fails to find enough buyers at this level, signs of weakness may appear in the short term. It's also important to remember that bullish order blocks typically do not break easily on the first contact. We usually see the price fluctuate in this region for a while before determining its direction with a strong move. If buyers continue to defend this level and a strong reaction occurs, the price could enter an accumulation phase and make an upward breakout. Particularly if buyers concentrate at this level, the possibility of a sharp upward move gains strength. Additionally, the reaction of the price from here will provide important clues about the overall market trend. If the price finds strong support here and moves upward, it will be a strong signal that the trend will continue. However, if the price breaks this level downward, short-term weakness may be seen, and lower support zones might be tested. Therefore, it is crucial to closely monitor how the price reacts at this critical level. When we look at the RSI indicator from a broader perspective, we can see the presence of a steadily rising trend line that has been in place for some time. This trend line serves as a critical support level in terms of the overall market momentum. In past periods, whenever the RSI approached this level, strong buying activity has been observed, triggering upward price movements. Right now, the RSI is pulling back toward this rising trend line once again. The fact that it is approaching this trend line indicates that we are nearing a new decision point in the market. If, like in the past, The RSI reacts strongly when it reaches this level. The price is likely to gain upward momentum again, strengthening the ongoing bullish move. From a technical analysis standpoint, the RSI maintaining a specific trend line is seen as a significant sign that the market is supported by buyers. If this rising trend line continues to act as strong support, the RSI could bounce from this level and move upward again, giving the market a positive momentum boost. Additionally, when we compare the current position of the RSI with previous price movements, we can see that this area has been one where buyers have stepped in strongly. An RSI recovery supported by increasing volume could trigger a larger upward movement in the market. Therefore, the reaction of the RSI when it reaches this level is crucial. If strong buying pressure occurs here, the likelihood of the price moving upward will increase. That being said, it's important to be cautious about whether the RSI will maintain this trend line. If the RSI bounces from this level and starts moving upward again, it would be a strong signal that the bullish trend is continuing and that buyers are still in control. By monitoring the RSI, we can determine whether this trend line has been broken or not. When we take a broader perspective on price movements, it's clear that the 200-day exponential moving average level is a critical threshold. The 200 EMA, which is considered a highly important indicator for determining the long-term market direction, is often seen as the boundary between bull and bear markets. Currently, the price has approached this level several times and made contact with it, but it has yet to sustain above it. This suggests that investors have not yet gained sufficient confidence, or that there has not been enough buying pressure in the market to push the price higher. However, if this resistance level is overcome and the price manages to stay above it, market psychology is likely to shift, and a larger upward trend could begin. Especially if a breakout with volume occurs, it would be expected that the price would form a strong trend and that buyers would gain more confidence in the market. Looking at past price movements, we can observe that the 200 EMA has historically acted as both a strong support and resistance level. When the price has managed to break above this level in the past, it has typically led to strong rallies. However, when the price couldn't hold above it and retraced, downward movements followed. Therefore, if the price breaks above this level and manages to stay above it, it will be a critical signal for investors to strengthen their long-term positions. At this point, it is important not only to see the 200 EMA being broken, but also to observe whether it holds as support after the breakout. In other words, if the price rises above the 200 EMA and tests it, reacting upward again, it would be a sign that the upward trend has started in a healthy manner. Otherwise, if the price fails to hold above this level and pulls back, this region could continue to act as strong resistance. Large investors and institutional buyers particularly watch movements above the 200 EMA closely. This level can be a powerful signal that the market's direction has shifted. If the price closes above this level with strong volume, investor confidence will increase, and sharp upward movements may occur as new buyers enter the market. Additionally, such moves often serve as catalysts for larger bull trends in higher timeframes. Given the importance of this level, it's essential for investors to closely monitor price action above the 200 EMA. If the price breaks this level and then forms strong support there, an acceleration of the upward trend will become inevitable. If technical indicators also support this scenario, a much stronger momentum could develop, and the price could move toward new highs. In summary, although the price has not yet been able to sustain above the 200 EMA, if this level is breached, a new wave of upward movement may begin. If the price breaks above the 200 EMA with volume and forms strong support there, we may witness the beginning of a significant bull market in the long run. In light of all these developments, closely watching how the price reacts to this level in the coming period is crucial. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.